Hey everyone, Elliot Wave Sage. Like to do uh, week getting ready for another week trading update. Um, this isn't financial advice. Always do what's best for you. Just use this for your education, entertainment purposes. So my videos last week, I mentioned about the indices. I was not interested in buying the dip. I wanted a bigger dip to buy. I believe we can get that this week. And there's no guarantee, of course. We could still rally ahead of time, but I do believe that a bigger pullback will happen and will be worth the wait, and I would be looking for that as a dip buy. So if we did rally early on Monday and Tuesday, more than likely that will fail and do something like this, or make a marginal high and then fail pretty hard. I really want to see this 427, 426 area, and you can call this like a connector of this decline, and now we're moving lower, so we can also gap down and have a pretty nasty sell-off on Monday. And this is going to be a kind of a capitulation type of sell-off if we get it, but I do believe if you buy the dip, I do think you'll be rewarded in this area, like this, for either new highs or a nice healthy bounce at least. So this is kind of what I'm looking at for now, and we'll see what happens. But that's the setup. The Dow Jones is in the same situation. The Dow Jones has got a very interesting structure where we come off, we have a connector and three waves. We come up in five, we come back in three, and we come back up in five, and we make a higher high. So this typically indicates that we should push higher. Uh, we should push higher. So this is an indice that, even though it's trying to shake out a lot of people, this indice should see 35, 385 at some point this summer. Uh, and then, who knows? Then you'll either get a 1987 crash going into, just probably the same time frame. Will start to pull back in early September, late August, meander around, and then October-ish. You know, just that's where we may end up. So I think we're gonna see this. The markets typically don't crash in the summer. It would be unusual to see that happen. So what would be more expected over the summer doldrums of trading is this kind of grind higher, but then the major sell-off that everybody is dreaming about and wants and says needs to happen, with the time to set that up will be September, October, maybe late August, as early as late August. Then I think your market is set up for a dramatic sell-off, and then it will either retest these lows, break the lows, but it will probably make everyone leave the market thinking that we'll have a massive collapse, and you'll have to see where things are trading at that point. That's kind of where I expect the market to go based on what I see today. But of course, data can change, and then I can change. But I think right now the Dow Jones is in this kind of straight down crash correction and from one. And I do believe, there is a gap here, so perhaps it can fill this gap. But I do believe this is a buyable dip into a wave three. So I do see this. I do see some nice gains later in the summer, July time frame in this sector. It would be very unusual to see the bottom fall out right now, and it just would be very unusual to see that. I would say, if you're trying to buy the dip here, you have to have, of course, stop losses, and of course the first stop loss would be at 32.5, 500, and then go from there, and then it could be a bigger flat, in two, and then A, B, C. But as we know, once you have a flat, you always usually get continuation, so it still would be a viable dip, but you have to manage your risk. So just don't know the future, but it seems to me that we should be selling off next week and then reversing at some point. Uh, and then the triple Qs, again, a connector, would like to see it at 351 for a dip buy, for the first really good dip buy. That could happen. Don't like the dip buy here. This would be better for a bounce, and then we'll see what happens. And then the IWM is already have 3 waves, and there's your connector, and there's your crash correction, and it's finding buyers. So the IWM looks like it's ready for a bounce out of this area. Could have been a buy on Friday already here. And if you look, we have 1, 2, 3, 4, 5. So it looks like, you know, a WX, you know, and then you have 3. So you have your three swings. So I think when I look at the Russell looks ready to bounce at any moment out of this. And there is, again, I think there's a gap here. Let's see if it's on the daily or not. Yeah, so there is a gap, so you could still see something like this. And then out, but I do expect the Russell to come up to this area like the Dow. I do believe the upside in the Dow and Russell will be better than the technology sector. Then I think the technology sector, the easy money is over, but I believe people will start to FOMO into these two sectors, the cyclical value, and then everything will be inflated, and then we'll see where things go from there. But that's the indices. What's what I expect, and then the Hang Seng should provide the world markets support for more highs. But this is a key level, 1800. If this is lost, then the market can continue to sell off for further downside. So this again, if it were to go down, it could come back and retest this November, October low. So it's very important from a market structure standpoint for this to hold. And if it does hold, then this is indicating weak dollar, and we could see the market pump supported by China. So perhaps they're going to introduce some kind of stimulus, and then it pumps the cyclicals in the inflation trade, and then the dollar goes weak. And here we have this, and then we get this wave 3 in China started. So no one knows the future, but if it does break, that's going to be significant market structure breakdown. That'll be the first real evidence that something more sinister is happening. I would actually think it would probably do something like this as a flat in 3 waves, and then you get the crash down to retest the lows. But once you see this, then I think it's pretty clear that you're going to get a reversal later in the summer, like I showed you, much lower. There's really no hope after that, but there's still hope that this could stay supported. We go into a wave 3 and we don't crash in October, and we're carried out to new highs, and everyone's surprised, including me, myself. So that's why it's kind of an important index to watch. But it's been pretty difficult to stay with this, because it's been one of those straight down crash corrections that looks like 3 waves is over here. I mean, I see 3 waves now. It could come down in 5, and then that would be a sideways market like that, if it can make another low. So we'll see how this plays out. Bitcoin is strong. I wouldn't try to trade in and out of it. My recommendation is, if you were able to buy it down here like I was recommending, you just kind of hold. And I have no intention of selling my positions for a long time. Even if we pull back, I'll just buy more. I'm content holding. I do think, though, we should be getting this wave 5 finishing, and then should get a pullback of some kind. Typically it pulls back to the wave 4, so maybe a very shallow pullback, especially if it's a wave 3. So don't expect anything. I don't think you're going to get a deep pullback. I think it's going to be something shallow, maybe a retest, and then 3 of 3. I do think we will be toward, again, and this also shows maybe the market's got more upside. Weak dollar is going to go weaker. We should hit this 40,000 area in crypto and then kind of top out around that September October timeframe and then have a more dramatic pullback. And typically wave 1 off the bottom has typically in Bitcoin a crash correction. It's done that before, but it should hold the lows, these lows. And if you go back in Bitcoin's history, it did that here and right here, crash correction here, So I think you need to be cognizant of a crash correction when we get to this wave 5 area here, that you get some kind of straight down crash correction, liquidation correction, and you're just going to have to either diamond hand this and not try to time in and out, and be aware. Don't be surprised that something like this happens and this thing just kind of comes back in this kind of panic as everyone FOMO'd in up here. So just be careful of this. Be aware of this situation in Bitcoin if you're trading it. You got to be aware of this kind of crap. I do believe we're going to get one of those before it can make its run to new all-time highs. We're going to get a crash correction, and people are going to that's where most people miss out. So just get ready for something like that. Don't let it surprise you. Then oil is really tough. Now we had that news in Russia today, this weekend. This could now put a premium in oil for that kind of geopolitical risk that no one saw coming. So we could see some upside in oil. Still in this connector wave. Now, this would be very unusual to have it end there, right? End there like that. RSI doesn't really support that either. So I don't think that's going to happen. But I do think if you really look at oil, look how long it took for the first leg. The next leg, it seems too short. It seems like it needs more upside. And typically, you'd want to even break this downtrend line. So it wouldn't be surprising to see this even come higher into this $100 area before you get the next leg lower, the Y leg, which is kind of the where I think the indices have a massive sell-off that I've been mentioning. But this should pump the cyclicals and energy. So that, again, this kind of sets up the Dow for that trade. When I'm trying to mention to you guys, this sets you up for something like that, and do what's best for you. But I would be careful being too bearish in energy at the moment. We could be coming out of these consolidations in a wave 3, wave 3 of 3, and you remember how tech pumped out of this seat. So it could be a similar situation with energy. And again, we'll have to wait and see how this plays out. But I wouldn't be surprised to see something like this versus just it starts crashing tomorrow, especially after what just happened this weekend. I don't think that's a reality. I don't think oil is going to just dramatically drop off the cliff. And I also think gold and silver now are set up for its bounce. Now, silver. So this is the more bearish forecast. So either if we break this low in 19.9, the next buy area is $14 and $13 silver. It's hard for me to believe that we're going to go there. So I still think it has another leg higher. And I'm looking to buy and go long silver And as you can see, there's 3 waves, but it can go lower to 2097. And from an RSI standpoint, I still like to see more downside in silver, and I believe you'll get that, but I believe this could be a really good opportunity to go long against 1990, this low. And if not, then this is some kind of flat 1, 2, and then it will come back to retest the $17 low, and it will probably break that. So this is something to keep an eye on. How much more selling can be left in the silver? Silver, I don't know, but it should have a little more downside. In gold, I've always had this here at 1834. Now we're starting to see that. Now gold, there is no divergence on the daily like there was on silver or on the weekly. So gold may actually finish early. So the better trade may be gold. And again, especially after what just happened with the Russia news. There'll be a WXY, but whatever. This could rally and then bounce out of that into this sell area, the finish, and then this is 1 of 5, 1 of 5, 1 of 5, and then this could rally. So gold seems like a little stronger than silver at the moment, technically. The dollar index, I still want to see this pattern complete now, given all the information I have. This would tell me China's going to pump like I showed you in wave 3. This will tell me oil's going to pump like I showed you. This will say crypto will pump. So this is the setup that pumps all those things. So what would negate that is if the dollar index breaks 104.67, then something much more sinister is happening in the market. And you have to be really careful and be defensive. The VIX is also weak. We're not seeing the VIX build, and I've always said anytime you had a market crash, the VIX builds as even the market may be going higher, and then it spikes. But here you have the opposite. It's actually being sold off even as we're selling. So this doesn't really represent the typical pattern you see in a crash. You want to see the market rise with the VIX rising and building and then holding those levels even as the market pulls back. We're not seeing any of that. We're just seeing a continued weakness, and now we're under a major support area. The next area of support is actually down at 8 VIX. That's incredibly low, typical of a wave 3 of 3 market. That's what this kind of VIX is typically associated with in this area. Some of the best gains in the stock market come in this area. So you gotta respect the data. And I don't know why the VIX is so low. Maybe someone knows how to manipulate it, but as you can see, we have broken lower before, and then it turned out to be the start of a major correction. So I would still keep an eye on that. So this could still be the start of a major correction, and perhaps the market makes a higher high over the summer, but the VIX is up here. That's what I want to see. And then, okay, we're setting up for a crash September, October. So if we could see the market go higher, but the VIX actually start to increase in this area, similar to what we saw in this time frame as we went up, the market actually rose, right? But the VIX was rising in this time period, the average. So that's what you want to see, and then you got the crash. So I think that's what I want to see. But if we see the opposite, the market's rising and the VIX is going down, then you're not really set up for that October calamity that I think needs to occur. So you're just gonna have to keep an eye on things. But this, like I said, it's going to be an interesting summer for sure. I'll just click through a couple of these stocks to see. Again, Devon lower, Oxy almost in the buy area at 52, and it probably is going to rebound pretty quickly from that area once it hits it, given how coveted it is with this is people really want it. Of course, Warren Buffett is loading up and this is its long-term trend line. So more than likely, it's going to stop around 52. I mean, 56 is. I mean, once this low breaks, the swings are in, and it could be bottomed at any moment once that low breaks. So I wouldn't be too worried about it. Rig. I want to see that last little puke to 477. I would ignore that count for now. It should bounce there. The XLE 69. We're close. But really once it breaks 75, it could be done at any moment. So these could truncate and fool traders and end a little early, kind of like it did here in this area. XOM, again, I just see here's your wave 4 cluster. So I do see like the energy complex still's got some lower lows, but it's I think it's at the end of a very long corrective pattern that should be bouncing soon. Bohr, 3 waves. It's almost at the buy area at 620 here. I want to see that 4-hour reset almost there. The daily is there. So this is a daily correction on this leg, overlapping waves. So could be very bullish. Halliburton, I don't like this structure. I want to see more downside. The OIH, want to see a little more downside. Now, this could be some kind of flat correction, and it could be the bottom there. That would be hyper bullish, but I would be careful being too bearish on the OIH, guys. This is a massive inverse head and shoulders, and you know this is the wave 4, so you know it should make it down to this 191 area, but if it can't, you know you could miss out on this 3 of 3 on a super cycle degree, even so or even grand super cycle degree. So if you're an investor, you gotta ask yourself, what do you want to do here? How picky of an entry are you looking for? Because this could have years of gains in front of it, years of gains. But right now, I would just keep an eye on this. Schlumberger is an interesting one, a 1-2, 1-2 in this 3 waves. When I look at where we are on this, if I look at the weekly, it did erase the divergence. Now the daily does not, and we're in a connector, so it's a very aggressive trade to try to long it here. As you can see, there's the downtrend line. So the daily supports more downside, but the weekly doesn't. You can come up, you can kind of get 5 swings out. So you got to, so it's a very aggressive trade in 3, and it bounced pretty nicely in my area. So if this could come out and break this downtrend line, then I believe the OIH is not going to come down here, and then it's done here, and then it's going to go into a good cycle higher. So that's why it's really tough in energy to time the bottom, but you have to do what's best for you. Here you have 5 up. You've easily come down and corrected this cycle. You're well below the 4 wave. You have 3 waves down. You have, so I think this is a setup, but it's high risk, high reward setup. But of course, if we lose the 42, then chances are we'll lose the 245, and then it will come back to this more safer area to buy at 180 for a great investment opportunity for long-term investors. This would be but this is one where the market short circuits you out of the trade and you miss the move, because Halliburton is Schlumberger is providing a clue that may be happening. So just keep that in mind. Then the discretionary, everyone's into Caravana. It had its first leg bounce where I expected it, and you got the bounce. Now the bounce failed, so the next area is 20, 1869 and a massive gap. Ideally, I'd like to look for this gap fill before I buy it. And again, it could just simply bounce again and fail again like that. Uh, but you have 5 ups. So whenever this finishes, it should have another swing higher. And this also tells me the market still got more upside. When I see something like this, when I see 5 up like this has still got more upside. That means the market has more upside, unless it's going to trade against the market. So then the staples, Celsius is definitely not giving anyone opportunity to get in on it, and it's just extending higher. But I would not. It's still in the same cycle, but it could come to an end. It's probably a flat here in an A, B, and we'll probably get C, and that could be a great opportunity to go long if you miss that move, if it happens. Let's take a look at the other ones that I've noticed that I want to mention. I gave this on my Smith & Wesson. I believe I've given this on my Twitter, and it inverse head and shoulders, and it played out nicely, and it's still going to play out. It tried to shake people out, but it was a trick. And now look at it. So it's clearly the bottom's in here. So that played out nice. Crypto stocks, these are going to do well if, of course, as Bitcoin goes up, and there's more upside to be had in all of these. But like I said, going back, I still don't like the structure in some of these, and I'm not trading them because of that. But they shouldn't go down unless there's some unknown risk black swan out there we don't know about with these individual companies. Then let's take a look at triple leveraged funds. SOXL is in a 4-wave that should end at any moment with AMD. AMD is ready to bounce, so this should be ready to bounce with AMD. And then, as you can see, a much bigger pullback will happen later. So once AMD is settled down, then this should continue higher. The TQQ, I haven't updated this yet, but let's go ahead and update this. So if this were to swing down again, 36.35, that would be a good dip buy in the TQQ in this area. This would be a TQQ dip buy opportunity here. And UDAL's in this 2. And hard to find the connector. This is a straight down crash correction. But it looks like to me that's the connector right there. And that gets you to 54, and again it closes that gap here somewhere in that area. So that's probably more downside in the market. Like I said, it's coming. And let's see the bearish ones. SQQ. It looks like it did find that low, and I said once it hit that Fibonacci, you should definitely get a bounce. It looks like we're getting that. If for some reason it sells off and hits this again, we need a bigger bounce. This would be an opportunity, I think, to try to short technology in this area for a bigger bounce. I want to see it retrace more than we have. I do believe at some point it's going to back test 28, but that may be in the September, October time frame. But I do think right now, looking at everything, to me, we should at least get back to 23 before we maybe make another low. TZA, again, this was an opportunity on the short side to go long in this area. Now the question is it going to hold or not? And it just depends on your point of view with the Russell. And if I see it break this massive downtrend line, then of course we'll have to get more bearish on the Russell, and perhaps the Russell will not bounce, and the Russell's about to have a massive breakdown. So keep that in mind. And then TNA could be coming up on 5 here, and or 1-2-1-2. So we'll see. Big day. Next week's a big week for the market. Again, emerging markets 1-2-1-2. But if we lose 26, then the whole market structure changes, and we'll start to have some massive breakdowns. The same thing with the emerging markets. If it comes down and breaks this 33. And then YNN again, if as long as it's above 29, you could have a 3 of 3. If it breaks that, the structure's broken, and then we'll probably break 19, and that's going to be a very bearish sell-off for China. mRNA is still grinding lower. Ultimate target $84, $86. I've been saying this has been the target since we were up here in December. You can watch my videos. People have been asking me. I said, wait. This is the area for long-term investors to come back in Moderna. If you believe in this company still, $80. This is where it could find a major low here. And I don't really like anything else in the healthcare sector. Then a technology, AI, could be having a straight down crash correction. This could be the connector here, and it's just straight down. So it could be something like this. When that happens, I would look for the wave 4 bottom to find the floor, which would be 29. So it could be something like that. And there's really no good way to predict when it's a straight down crash correction other than using RSIs. And you probably want to see at least the daily RSI come to the oversold area before it's ready to go, because it's correcting the whole move. AMD should bounce here, and maybe that, yeah, I would call that a 4. So and then this kind of tells me too, markets support it. Now this is also 3 waves, but we did make this high, so if I did label this 5, it should swing higher in 5, right? Because we have 5 up. But if it's 3, well, typically you don't have a crash connector wave with a higher high, move here. So all this tells me is there's probably more upside in this market, whether you think it deserves it or not. I do believe the market still has more upside. That's a clue. Wolf is again kind of breaking down, but I would like to see it go lower for a great dip buy opportunity to finish this 2 wave, and we'll see what happens. Disney still investment opportunity as long as 87, 86 hold. So I mean, that's your risk. So your risk is $2, and your reward is a generational low. I mean, you do what's best for you. If you really want to, you could also say 84 to be safe. So $4. So you have $4 you can lose on Disney versus upside potential of a long-term investment into $300-400 in the next decade. So it's a good, like I said, I don't know. I know Disney's not popular, but that's typically when a company's at the grand super cycle low, which it is right now. The news is horrible. People question the company, its mission, everything's failing. It's terrible news. That's what you can't buy a stock when the news is good. So the stock is horrible. The movies are bombing in the box office. All this, it's being blamed for wokeness and the war with the governor and the new CEO. And I think another executive was left the company recently. So this turmoil is typical of a wave 2 grand super cycle correction. So just keep that in mind. But again, you never know. I mean, they could have a lot of financial difficulty, and they do break down. And if we break down, it really doesn't have hitting good technical support, as you can see, until we get to 42 bucks. It would be a massive drop if that happened. So again, it's risk reward. We'll see how it goes. Microsoft still grinding higher in this fifth wave. And then you should get a bigger pullback, but we'll need to take a look at, as you can see, we have five up here. So the question is it in a new bull market like that, or is it a flat, a trap? We don't know, but I do think we have more upside before all that is figured out. And Google's still struggling. Now you see that wick, it almost hit the buy area, I believe. Then that is now supported against 118. So now the question is, where's Google? You have 3, and then you have 3. So this is a very important high. And if it breaks, then Google could be in a more bullish structure. This would be a 1, 2, 3, 4, 5. So it could be something like this, and then it could still be B in a different, instead of a W, it could be an ABC and not a WXY. And then if it becomes an ABC, it could fall from here, or it could be a whole new bull market like Microsoft, and that was the bottom right there at 82. We don't know, but it does seem likely we'll get more upside. And Apple, the same thing. Again, more upside to 197, and then we'll see. Do we get the flat? Amazon did the same thing. So everything, you see, the market's strong. So here's 3, and now we broke up. So now we have 5 up. So it's not a WXY anymore. It will be a 5-wave move off the low. So it changes everything for Amazon with the divergence. So Amazon now is got a bullish count. 1, 2, 3, 4, 5. Something like that. And maybe this is 5 up. Yeah, maybe let's do something a little different, because I don't like the way that cycle looks. Something like this, 5 up, and then this is 5 up here. So it's like an ABC. So it's a different structure. And this is a 1, 2, 3, 4. So maybe a little bit higher. And then we'll see what happens with Amazon here. Is it going to collapse or not? So obviously earnings is huge. And again, it could be a 1, 2, 3, 4, 5, a 1, 2, 1, 2. But this is kind of the look at the moment that I would go with. But there's 1, 2, 3, 4, maybe one more high to finish 5, and then there should be a pullback of some sort. Nvidia fooling a lot of traders, trying to, again, top tick to short, never a good strategy. So now you have this move finished. So the question is 5 going to extend, which it could, or is it done? If it's done, the market's very bearish. My guess is the 5's just going to extend higher, because I don't see the market wrapping up. And with AMD, so I see another push higher. It wouldn't surprise me to see this thing almost hit 500 bucks before you get this bigger pullback. And then Adobe's on the 4. That's a connector, so it could still come back and fill the gap. This would be a good dip buy opportunity if this happens on that 4. That would be at 456, 448. in this area. No guarantees it could be done right now. RSI's done on this, so yeah, we'll just have to wait and see. And then, of course, everyone loves Tesla. Tesla, you know, if you look, there's 3. So it could be done here, but if I look at it, it could also drop to 236, fill the gap, 230s, and this will be a good dip buy in Tesla. Opportunity. I won't go through all of these. I'll just kind of point out anything that's interesting to me. I was looking at Palantir was in a buy area. I like this 3. It's below the high. I like this setup for a new high. This was a good trade setup on Friday. Palantir in this area with a stop down here. But I mean, that was good. I'm looking at Octa as again, like Octa in this area if we can get down here. DraftKings is really a tough structure to trade at the moment. It could still be in this flat and come back to 22. Good buy. Or there's a chance it's already done in a very bullish breakout. So it's tough. This is a tough one to read. Robinhood pulled back into Cathie Wood's buying it. And if crypto's going to start to run, Robinhood will run with crypto. It's typically what, you know, as people want to trade, as the meme stocks start to run, Robinhood would run. And then this was a good dip buy opportunity on Friday to get in on that. And I believe she's been loading up on it. So again, the market does not want you to make money. So they're trying to get you to sell your shares before it runs. It desperately wants you to get out of the market because they don't want you to make any money on it. Yeah, these are just dead. These stocks. Let's take a look at space. I think that was selling off. So I got so it is in a buy area right now between 447 and 381. You could maybe buy it against 410. If it holds, it may come out of this, but yeah, it looks like it filled that gap. So yeah, I think again 1, 2, 3, 4, 5, 3 down, deep correction. So should swing up one more swing at least. Then sound again, just kind of being conservative. I'll call this 4 here. But it could be another 1, 2. It wouldn't surprise me if it's another 1, 2, 1, 2. So we'll see. BBAI is kind of the same thing. It's in 2 in a 3-wave move. So it should find support at any moment as long as it's above 193. If it isn't, then this is a connector and it will come back to retest 151. But I really believe it's bullish. It's ultimately going to break this high eventually. No matter the tricks that trader, you know, the big traders are playing on you. And then the green stocks were really getting hit. And M-Phase Energy starting to break down again. Finally, took a while. I want to see it at this area, but it could even get down even lower. First Solar, we remember this pop. I said it would fade and fail. It has done that. It has filled the gap, but I still think it's got more downside coming to this wave 4 low. And what's also interesting is ARKW broke this high. So this is also telling me the meme stock trade is not something you want to think is about to end. Even though we may pull back, ARKW should make it to the $60, $66, $70 area, and that also tells me more upside in the market. Now the RK has not broke that high here, but I expect it probably will, which is why I think the Russell has got more of a pump left in it. So that's something to keep in mind. Zoom video is another one to watch as just kind of a trading but it is dangerous. Is a lot of risk. I would not hold it in the earnings in case it collapses, because it can easily do that in earnings. I would say, but we should be pulling back. If we can get to this $57 area, I don't really see it go how it can go much lower from there. But then you'll be under the IPO price, which is very dangerous technically, and that means it could be a go to zero chart, and I don't know why it would, given how popular it is. Maybe there's some financial difficulties it's got. Maybe it has too much debt. I don't know, but it should find a major low here. If not, it's already done so. And if Kathy Wood, who owns this, it should be going higher. This should be supported. So it's tough to time it, but it's a high risk, high reward trade, because it could easily come out of this structure and come up to $140 later as it retraces this monumental sell-off. And like I said, this could end at any moment. It could already be over. It could already be over here like that. This is just kind of a very safe entry. But earnings, if we're trading down here and earnings come, I wouldn't probably hold it in earnings without having some puts as a hedge, because being below this IPO, it could open up the floodgates. Some bad news. And then China Neo has been bouncing nicely, so this is a dip buy opportunity. This also shows that China could be supported. Easy 5 waves up, 3 down. This could be done here, at least bounce, and it may come back to try to retest the $7, and that would be an awesome opportunity, a safer trade, because now you have a pivot to trade against when you go long. Now you can define your risk. And like I said, most of these XPVs, this Lee is really bullish, guys. I have to check out you got these SUV, electrical SUVs. It's just really bullish, even more than Neo. I mean, we went from a 12 to 36. It didn't quite hit our buy area, but I do remember recommending buying it here, and it's just so much FOMO, and everyone just loves this company, but it doesn't get a lot of attention. Maybe EVU is another one that pumped really nice off the lows, and it could be making a more dramatic pullback for another opportunity for a dip buy in the high 20s. I personally don't like trading BABA, but you guys could do what's best for you. It looks like a retest of these lows is likely at some point. Yeah. KWeb heading down in this 2-wave against 24. Very important pivot. If we lose it, it's probably heading down to these much lower areas. It's going to be very bearish, again, for the market structure. All right, so it's been a kind of a long video. Like I said, I think you'll get some more downside next week and then a bounce, but the bounce, you need to be careful. Could be a big bounce, could go to new highs, most likely it will, and then you'll have kind of that low volume summer grind higher, and then there's the chance for the much bigger correction, sell off, crash, whatever you want to call it, in September, October, possibly late August. That's kind of what I see here. And then with the Dow Jones, I think the Dow Jones offers the best upside potential this summer, along with the Russell here. But nothing's guaranteed. Do what's best for you, and we'll see what the future brings. But I see the market bouncing, and then higher highs, and then a massive situation and decision the market will need to make this fall, this late summer, early fall, and it could be a horrible time for investors and traders like 2008 and 2009. It could have some massive panic and drop, but we'll need to look at look at the market at that point and make a decision. But for now, I think is best the best thing to do is buy good dips and trade it, and not look to try to top tick shorts. Like if you're trying to short Nvidia, you're just asking to keep getting blown up because that's what everyone's trying to do, and it's just going to keep squeezing you higher. It's just the way this is. This is, if you ever tried to short crypto in a pump that makes no sense, it just keeps going higher. Without logic, because it's just that's what the market tends to do. And I think trying to short Nvidia is not something I would recommend. It will be obvious when it's time to do that, but right now it's not the time. It's the time to buy when you get deep pullbacks. That's the strategy I'd recommend you guys do and think about, and not trying to top tick shorts because it's too risky given what I see with the VIX and the dollar could break down and everything else. So just keep that in mind. All right, guys, that's it.